Session highs for our markets off of the rising price of oil, but it's so strange because we saw the weekly inventory come in at 500 million barrels, not seen since 1930. What do you make of that? Help me out here.
Hi, Ramey. Well, first of all, I don't think that oil and the markets are really correlated. I really think that oil is a commodity that had reached a level that was a good spot to buy it, and I think especially when you saw the S&P downgrade yesterday of many of the oil stocks, to me that was a sign that the bottom was in. However, I think the stock market's a whole other story. I think we're getting what you would call a dead cat bounce here in the market because we were pretty oversold yesterday and we were pretty oversold this morning. So you get a natural bounce, but I don't think they're necessarily related. I think oil is going to work its way higher, and I think the market's going to work its way lower.
All right, I understand, though, that you are quite bearish on the markets. Volatility right now hovering around 22, 23 or so, but you think the correction is going to be much deeper. What are you looking at? I understand you're saying not to look at the Fed.
You know, I think as soon as the financial engineering stops and the manipulation from all the central banks stops, I think we're going to eventually see. I'm looking for 1586 in the S&P as a final target. Now, again, we're not going straight down there. There's going to be a lot of bobbing and weaving, a lot of up and downs in here. There'll be some vicious rallies like we saw Friday, like we're seeing today. But overall, we're going to work our way down. Just take a look at the overall S&P underneath the hood, not the mainstream stocks, but there's many stocks that are already down 30, 40% going into next year. So I think that we're going to see lower prices.
All right. Now, you're looking at ConocoPhillips. It does report its earnings before the bell on Thursday. What are you looking at for them? They're down year to date about 20%, even though they're up to date a couple of percentage points today because of oil.
Well, I think this goes along with my overall theory, Ramy. I think what we've seen here is the oil stocks themselves have been really beaten down and worked on really hard here. So if I'm correct that the oil has made the bottom and the downgrades are incorrect, then I think that they'll have bad earnings, but we already know that. That's been priced into this market. I want to buy ConocoPhillips because A, it pays an 8% dividend, but B, because I'm trying to bottom fish here a little bit, I think it's a great risk-reward trade that I can actually set myself up with very limited risk and unlimited upside potential. That's the kind of trade I always like to look for.
All right, so speaking of your trade, let's go ahead and get into that. I understand that there is the max reward is unlimited. Tell me about that.
Well, what I'm going to do here, Ramy, is I'm putting together, I'm going to sell some premium in the expiring week here. I'm going to sell the 36.35 put spread 5 times, okay, for 50 cents. It's going to give me a risk of 50 cents per contract or $250. And I'm going to take those proceeds that I'm collecting. I'm going to go out to March, and I'm going to buy the 37 call for about $2.40. So what I'm doing here is basically almost for even. I'm buying a call, which gives me unlimited reward to the upside. My risk is only the 50 cents I can lose in the calls in the put spread, and the $2.50 I can lose on the option trade. That's my max risk is 500, and that's only if we go straight down and don't rally between now and March. If I get through this week and we stay above 36, guess what? I own those calls in March for 50 cents, and that's my max risk drops to $50 if I get through Friday.